The January FOMC meeting minutes. This moment is being framed as a macro pivot. But here's the kicker. The markets already began reacting before the minutes were released. Today we're not just going to tell you what the Fed said, we're going to explain how the market already priced it in and why price always leads news. By the end you'll know exactly how to read this reaction every time a major macro event drops. The FOMC minutes from the Federal Reserve's January meeting are out today. These are the detailed internal notes from U.S. central bank officials, showing what they discussed, what they fear, and how they see future rate moves. Investors don't just look at the decision, they look at the reasoning behind it. Was the language hawkish? Did they hint at rate cuts? Did they soften their outlook on inflation? All of that shapes policy expectations, which in turn affects every asset class. Here's the interesting part. Stocks, FX, commodities, and crypto didn't wait for the minutes. U.S. stock futures were soft as the market digested fears about AI spending and macro growth. Equity selling pressure grew even before the release, hinting markets were already pricing in uncertainty. Euro-USD held in a range that suggested expectations of future rate cuts had already been baked in. Oil markets moved cautiously ahead of policy signals. This tells us something powerful. Markets move first, news explains later. The price already reflects investors' positioning for potential future rate cuts or pause signals, before traders read the minutes. That's the real edge. What most people get wrong is this. They look at headlines and try to trade the narrative. But price doesn't care about talk, it cares about structure. Price reflects levels where buyers defend support, zones where sellers reject resistance, breaks that confirm trend shifts, rejection candlesticks that signal hesitation. These are structural signals, not emotional reactions. For example, Bitcoin and crypto markets struggled to break key resistance near $70,000, reflecting risk-off posture before the minutes. Gold and FX began pricing either safe haven flows or tactical rotations ahead of policy cues. You don't wait for the news, you watch how price behaves around the event. Here's another key subtlety. The market wasn't reacting only to rate decisions. It was reacting to expectations about future moves, not just what happened, but what might happen later. That's why even the anticipation of a June rate cut influenced positioning earlier in the week. This is how macro-sensitive markets work. Traders front-run expected policy shifts. Volatility builds into price. Liquidity moves before the news. This is precisely why price action can feel disjointed from headlines, because price has already done the heavy lifting behind the scenes. Let's break this down with key relationships, stocks versus risk. Even if equity futures were mixed, the reaction structure reveals whether sellers are dominant or buying dips. FX response. Euro-USD sideways before drops, reflecting caution about future rate paths. Crypto sensitivity. Bitcoin's resistance highlights crypto is now treated as a high beta tech proxy. Commodities in safe haven. Oil's modest gains show supply, demand caution. Gold reflects volatility pricing. None of these moves were random. They were forecasted by structure. Every time a macro event happens, traders ask, what did the news say? But professional traders ask, what did the market do beforehand? Structure tells you. Conviction level. Real risk appetite. Dominant flow. Probability of continuation or reversal. News is retrospective. Price is predictive. And this is where Tahlil Plus becomes incredibly valuable. Instead of relying on one analyst's view or one interpretation, you can compare multiple technical analyses. Rank them by historical accuracy. See where analysts agree. Validate structural clues across timeframes. Confirm which signals the market trusts. So when the FOMC minutes drop and half the world is reacting emotionally, you already know whether markets were pricing a dovish stance, a hawkish surprise, or a neutral pause. This is real clarity, not guesswork. So next time you see Fed minutes shock markets, stocks plunge on policy fears, crypto reacts to headline risk, remember this: the market never waited for the news. The news reacted to the market. Price always leads. Structure always reveals. And with tools like Tahlil Plus, you see both clearly.